if you are trying to learn from me, and if you really want to be independent and independent in your thinking about how you should engage the marketplace, this is the absolute best way to do it, folks. And I swear to God Almighty, I wish I could convey it much harder than this. I don't know how to articulate it more than that. I want you to do it the right way. And I have paid students that don't want to fucking listen. From 2016, they still didn't do this part yet. They still didn't do this part. And it just takes a couple months to do it. But distractions, lack of discipline, personal schedules, personal character flaws, stubbornness, all those things are contributing factors. Fear of doing it wrong. For some reason, y'all think that, pushing a button with a live account because you think it might do something, and if you get it right, it'll ease the pain of the scary feeling of what happens if I get it wrong. So you focus more on, if I get it right and I make money, wow, that's gonna be awesome. If you're trying to learn like that, you're doing it incorrectly, because you're making every transaction with these charts a monetary success or failure when you don't know how to trade. So the only thing that's establishing is fear of failure. That's exactly what that does. If you just simply look at the comment section of the videos and the Twitter spaces and the Twitter posts that I make, the main psychological barrier that people constantly bring up is, how does a trader overcome the fear of it not moving the way they want it to do it? And here's how you have to get over this. You have to watch day after day, week after week, month after month, how you read price. How is it that you're going to go into the marketplace and look for a specific setup? When are you going to be trading? Are you going to trade at 8:30? Are you going to trade at 9:30? Are you going to try to find a setup before 8:30 because you have to be at work? Are you going to be trading in the London session because you can't be in front of the charts or have access to the charts during the New York session? See, all those factors are going to weigh heavily. Knowing where the market is right now, where is it not likely to go? That's the first mindset that you should have. Once you've arrived at where the draw on liquidity is, where it's going to reach for, that's the number one deciding factor of a profitable trader. Because if you don't know where it's going, it matters not where your stop loss is. Because if you're upside down in your trade idea and you're going against the grain, you're offside, going against the direction that the market really going to go in. See, that's what you're afraid of right now as a new student. You don't know what you're doing. Just tell me the bias ICT and I'll do the rest. No, you'll lose money. You'll lose money. Because you'll go in, you won't hold the trade properly, you won't use a stop loss, but you'll see a tiny little fluctuation and you'll think it's reversing on you and you'll collapse the trade, and then it'll run in the direction that I said it would go. And then you're going to chase it, moves too much, and same thing, oh no, it's going back down into a natural, small little retracement, institutional order flow, maybe a fair value gap. And that feeling of when price is retracing into something like that, when you hear me talk about, okay, this is what it should do, and you want to let this happen, it's completely normal. It's a boring conversation we're going to be having over the chart. You can't put blinders on thinking, well, that stuff over that country, that's their problem. I ain't got to worry about it. I'm making money. No, that can cause you to not have opportunity or your trade to become irrelevant. And it doesn't mean that the model's changed or that the concepts are failing now or to change the algorithm. It just means that's natural market conditions. It's a variable. You have to make allowance for that, which is what risk management is all about. So when you understand where the market's likely to go next, that's your number one priority. Know how to determine where the market is likely to go to next, the highest degree of probability of it going higher or lower, and what level specifically. And knowing that if there is enough range between where the market is trading at the time when you determine where the next draw on liquidity is it going up Okay, where's it going up to? Likely. Now, if there is a 20 handle or 20 point movement between market price and where you think it's going to go up to, that gives you a really good opportunity to get your 5 handles. But why can't I go for 20? You can once you know how to trade. But right now, I'm trying to give you a very easy, low-hanging fruit objective to strive for a consistent opportunity to do each time. You got to trust me, folks. I'm taking you exactly where you want to go. You just haven't been here before. I've been here many times over. I know how to teach this stuff. I know what it's likely to do next. I'm going to fail sometimes, but you're going to see most of the time I'm going to be right. Period. That's what trading is. You're going to have times when you think you see your setup and you're going to engage. You're going to put your stop loss exactly how it should be. You're going to have your partials already in mind where you're going to take this much off, and you're going to get determined your final target. And that's your entire plan, how you're engaging that price move. And it's going to go down and hit your stop loss. But you don't need to do anything but just trade one. You can just do ES and it's fine. Stop listening to these Yahoo cowboys down there. They're blowing their accounts every day in front of you on live streams, telling you you got to be in the NQ. No, you got to learn how to be able to do this correctly and not be impulsive because of the quick, sudden movement that NQ will have over ES. ES is still going to fucking move. It's going to move. They're both moving. But you want to be able to find consistent setups. And if you can take 5 handles out, listen, okay? Because I'm going to graduate your understanding, very small little increments. 5 handles per day. That's your goal between February 7th and the end of the year. You want to be able to find that. I didn't say you need to trade with a live account or your funded account and get 5 handles. That's not what I said there, folks. Listen, your goal is to be able to consistently find 5 handles that you can see manifest before it delivers in price. You will have that skill by the end of the year. If you listen to me, you will fucking be able to do that, and nobody will be able to take that from you. They won't be able to troll it out of you. They won't be able to cause you to have doubts. They won't be able to fucking cause you any confusion. They're not going to distract you. They're not going to lull you into do some kind of dumb shit over here. You're going to find 5 handles a day, and 5 handles a day on a 1 minute contract is $250 a day. That's not a lot of money. But when you consistently make that every single day, I guarantee you 70% of this listening audience, it's more than you earn a week. And that's just one contract. So what happens if you parlay that up and you get to another $10,000 in profit? Now you can do two contracts. Now you're making $500 a day. And then you make another $10,000. You can afford to do one more contract. So now you're making $750 a day. So you all want to do what you see these fuckers on Instagram and fake shit. Oh, I flipped my account this month. No. Show me precision entry, impeccable risk management, consistently. That right there makes millionaires. And you can start with any amount. Any. Fuck these clowns, okay? These people are literally teaching you to do the most stupid shit, and they want you to pay them $5,000 for it. No, you don't need that, folks. You don't need that. You're listening to an old fuddy-duddy 50-year-old man that knows this shit like the back of his hand, and I can't wait for you to see this stuff laying in your hands that you can pick it up anytime you want, like a tool that you've trained with and you know exactly how to do it, how it can hurt you, and you don't do those things to hurt yourself. And you'll be able to choose when you want to get in there and do something. You're going to be able to scale this as big as you want or as small and consistent as you want. You want to treat it like a part-time job? I'll teach you how to do that. You want to turn this into a fucking empire? I'll teach you how to do that too. It's going to cost you nothing but showing up each day. That's all you got to do, folks. That's all you got to do. Take notes and just listen, because I'm going to prove this shit to you on these charts live. And then a fucker out there going to be able to say anything about it. Not one thing. Not one thing. You are getting ready to embark on an exciting experience. I fucking wish I had this when I was coming up. Like, I wish I had this. And I'm doing everything I can, and I'm planning all the exercises and everything that I'm going to put you through exactly how I wish. Knowing what I know now, looking back at my 20-year-old self, the perfect mentor, the perfect guy to listen to and learn from would be able to do what I'm about to do. I'm not enticing you to trade with live accounts. I'm not enticing you to go with any broker. I'm not enticing you to use any particular funded account. Notice I don't do that. I don't rep brokers. There's somebody out there right now pretending to be me saying that this is the broker that I recommend. I don't recommend any of them. They're all fuckers. They're all going to fuck with you some way, shape, or form. Start making a lot of money and they will fuck with you. Trust me. You're going to get slippage. You're going to get requotes. It's just the way it works, folks. That's just the way it is. They're small little nuisances. That's all it is. And that's why you don't want to have all of your money in one account. You want to spread your money across several brokers and one account only, one account. That's the one you parlay up. But everything else, when you make money, you take it out. Don't leave your money sitting out there. You know, anything can happen in a brokerage firm. You know, we can have a big major crash, a flash crash that nobody expects. Not even me. Something can come out and boom, market just shits itself. And brokerages can go under. And you don't get your fucking money, folks. This is gone. So you don't want to have everything, all your eggs in one basket analogy works appropriately here. So I don't represent any broker. I don't represent any funded account. I never tell you to join a brokerage firm. I never tell you this broker's good, go here. I don't ever say use this funded account. I don't ever do that. That's why I don't do commercials for people. I don't do product placement in my videos on YouTube. I get lots of requests to do that every single month. They email and say, you know, would you be interested in letting us do a 30-second commercial and we'll pay you $5,000 for it? No, thank you. I don't want my channel to be that way. I don't want that. Because that means I'm saying what? I co-sign your product, your service, your brokerage firm, your funded account. I don't have that. And I have people that are reaching out that want to start that partnership with me, and I am not going to do it. So there's no incentive for me except for your success. That's it. That's it. That's all I want to see you do. I want to see you do well. I want you to send me emails occasionally once in a while and say, hey, look, this is what I was able to do. Thank you so much. I was able to help this person. I'm doing this over here. I'm building a hospital. I put a wing on the hospital over here. I'm putting a orphanage together here. I've funded this entire village of individuals and I've gave them food for the next 90 days. That's treasure to me. I don't give a shit about online clout. I don't care about that. I want you to be able to feed yourself and your family and help others and be passionate about doing that. And most of you wouldn't even think doing that because you can't hardly make your own bills right now. But once you are able to do this consistently and you can make another stream of income and you decide when you're going to do it. And small losses like a flat tire going to work, they're inconvenience, expenses. It's not fun. It's irritating. That's what losing is in trading. That's exactly what it's like because it's measurable. You know exactly where you're going to put the stop loss. You know why, if it goes there, you're going to get stopped out. And you want that to happen. If you're wrong, you want that to be the very mechanism that prevents you from losing more. How do I get over the fear? You go through it. You just walk forward. That's it. You just keep walking forward. But if you're walking forward with no stop loss, recklessly over trading, adding more contracts when you're already down, trying to dig your way out of it, then you get results like you see some of these YouTubers out there doing. That's not what you want to do, folks. That's not. Have a very easy, low-hanging fruit objective. Something that's easy, a target that can be easily reached. I think, and somebody that's been trading for a while probably snickered earlier when I said 2.5 handles. Okay, 2.5 points. 2.5 points is nothing. But high-frequency algorithms will fire in there all day long, going up and down in the same day, doing that all day long, and make, well, a lot of money. But they're losing too. They're getting that ebb and flow, up and down, up and down, up and down. They're not always winning, but they know over the course of the day, ripping into that marketplace over and over and over and firing in there constantly, catching fluctuations of 1.5, 2.5, 3 handles. Once it gets there, they're out. They're not in there trying to get the daily range, average daily range. They're not trying to run for buy side liquidity. They're not trying to run for sell side liquidity. They're just in there getting fluctuations over and over and over again. They're capitalizing on that minor fluctuation. Algorithms that are engaging the market. I'm not talking about the algorithm that the market engine uses for price delivery. I'm talking about traders, entities on the outside that are trying to capitalize on price fluctuation. So don't be discouraged by 2.5 handles as, oh, that's not worth my time, bro. No, you can do a lot. You can do a lot with that, because you can take that and scale it and say, okay, I know I don't have a whole lot of time to be doing anything in the marketplace because my schedule won't permit it. Okay, fine. But you can find 2.5 handles. You can get that. Not that I'm encouraging it, but on a smoke break at work, a bathroom visit while you're at work, while you're walking through the mall, while you're waiting for your wife to pick out the shoes that she doesn't need, like I have to do sometimes. Okay, I can't stand being here. She's going to ask me, do you like these? Man, why are you going to put me in a situation where I'm going to lose no matter what? You know what I'm talking about, gentlemen, right? I have to be distracted from that. It'll drive me crazy. So I'll go on the phone and there it is. I'm in Trading View messing around with something. 2.5 handles is easy. That's literally like fruit hanging on a tree that you just walk up to and grab a hold of it, pluck it off. Whenever the fuck you want. Whenever you want. As long as that market's moving, you don't need to be in those times I've told you to trade in. But 5 handles is what I want you to focus on. That's your goal. In your journal, that's what you're looking for. So by looking at having a very small window of expectation on what you should be trying to pull out of the marketplace, that being 5 handles. Okay. If we go through this process and you take 3 months and you can't get 5 handles, but you can show a record of you doing consistently 3 to 4 handles each time you do it. You're not there at 5 handles, but you're able to go in there and see when it's going to likely move in one direction or the other. And you can time it with a small time frame. Because if you can time it with a small time frame, you can time it with a larger time frame. The larger time frame just takes more time to deliver it. But it's the same thing, because price is fractal. It's the same things that are occurring on these small 1-minute and 5-minute charts are occurring on weekly and monthly charts. It just takes a whole lot more time. I don't have the patience for that. Some of you might have the patience for that. You may have the predisposition to do, hey, I can do a trade on a weekly chart. I don't want to go anything lower than a weekly chart. I don't know how anybody could do that, because that's an incredible amount of patience. I don't have that much patience. I can change my mind very quickly. I can have something distract me and take me out of a train of thought, and it takes me time to get back in sync. So if I'm a trader that requires just daily candles, and I get a news report or something happens and we break out into some kind of conflict in another country, or a scandemic breaks out again, something to that effect, all that stuff's going to take my attention and dilute it from what I'm trying to do in the marketplace, and I won't be able to focus. So because I am obsessively compulsive and I'm bipolar, I'm wrestling a lot of mental baggage, that I can't fix. I'm hardwired this way. I can't fix it. So I found where I can engage, where it gives me plenty of opportunity, even if I lose my focus. Someone distracts me. My children distract me. I'm late to my chart because of something. I have to eat something, or I have to, relieve myself. We're all human beings. Something has you away from the charts and you can't be there. Okay, that's fine. A 1 and 5 minute chart puts me right back in sync with things, and I can find another setup. Every single 60-minute candle has an opportunity for you to trade that 2022 model. What? Yeah. During those times, I've taught you to focus on, not every hour, during those hours of 8:30 to 9:30 to 10:30. Every hour candle, if you strip that down to 15-second candles, that 2022 model exists there. What? Yeah. There's a, what was the, there was a children's movie my youngest son drove us to a couple years ago. Dr. Seuss. Something, the fact that like there was this elephant or whatever, at least it looked like an elephant, and they lived in this world or whatever, and he heard somebody talking, or these little characters talking in this flower or something. The memory is vague, but I remember when they zoomed into this world, it was a whole lot of things going on inside there where it's microscopic. Well, if you're looking at an hourly candle, and imagine that you had a microscope and you drilled down into that 1 hour candle and how much movement took place inside that 1 hour candle, and you look at it through the lens of a 15-second chart, that 2022 model is there every single hour. The fluctuations are not going to be monumental, but that same thing can be programmed and coded as an algorithm that fires just like that, autonomously. Your perception of price is so heavily taken out of focus with the books, the logic that people teach you, that don't know how price is really going to book. They have no idea where it's likely to go next. You do the things I tell you to do. You don't do the things I tell you not to do. Focus on the things I'm telling you to focus on and nothing else. If you just follow that going through the rest of this year, you will get the understanding that you need to do it independently. You'll know when to do something, when not to do something. You'll understand how to place a stop loss. You'll understand what it feels like to get in there doing it and desensitize yourself. That means remove all that fear and anxiety that you're feeling about doing it incorrectly. You're going to do it incorrectly, but that incorrectly done process doesn't always equate to failure. What causes failure? Repetitively going in, fixing what you think is an error. It's just a transaction that didn't pan out. And it took something away that wasn't a deposit in money, a loss of time. Doesn't it go without saying, if you're watching something, if it goes to 5 handles, you should do what? Initially, square the position off right there at 5 handles. And just watch, does it go beyond 5 handles? And you're going to feel all this impulsive behavior start to well up inside you. Oh, I shouldn't have done that. If you're trading with a live account, following along in the commentaries I'm going to do in live streaming, you're going to feel like, oh no, I shouldn't have listened to ICT, that fucker. He told me to get out of 5 handles. Look at it, it's already 30 handles. What did you learn there? Greed. And it's going to build in the building blocks of fear of missing out on that next big rip. Instead of just saying, I was looking for 5, it gave me 5, I moved to the sidelines, and now I'm going off to go spend time with my kids, go watch a movie, I'm outside, I'm doing whatever I want to do, take a drive in my car. I'm on vacation. I got this one in and nobody knew about it. It's done. But once you see how we can see these things panning out every single time, it's the same fucking shit. It becomes entertaining. It's almost like the book you've read multiple times. You know the plot, you know the character engagements, and you know how it's going to end. Now, that same book that you read over and over and over again, you give it to your kid, or your dog gets a hold of it, chews it up, rips a couple pages out, or spills coffee on it, and you can't read a certain paragraph. Do you lose resolution if you go through that book and can't read that 1 or 2 paragraphs? You lose a little bit, but you're familiar. You still know what is likely to occur. You've been there before. It's kind of like a hologram, okay? A hologram and how I'm going into a scientific. Well, I'll just go there. A hologram is an image that's formed with a capacity that allows for some things taken from it, and you'll still see it. You might lose a little bit of resolution, but you can still see it. versus only being able to see black and white binary only. That's not what this is, because you're going to be able to see more than just one setup, which makes you much more effective as a trader. See, if you're following a logic like most retail things are, you're looking for this one pattern. You're looking for this one setup in this indicator. When it's oversold, you're trying to buy it. When it's overbought, you're trying to sell short. If the moving averages are pointing down, you're trying to go short. When an overbought reading happens in your indicator, that really confirms that it's probably time to sell. By that logic, once that pans out, and say the market starts to drop a little bit and it leaves the overbought condition, and you're between overbought and oversold, you're in that area where, hey, you're between setups. That was one of the frustrating things I had when I was using retail stuff and fumbling. Only when the market was going parabolically up, I felt that it was working, because I only used a 50-day moving average on the daily chart for my bias. If it was sloping up, I wanted to focus on being long. And then I used an hourly stochastics, slow stochastics, and I looked for type 1 bullish divergence, which is the classic lower low in price and a higher low in stochastics while it's oversold. Once the K and D crossed on the stochastic, that line, once that occurred, then I would go in the next day and I would buy strength at the open. And that's how I was trading. That was it. There was nothing to it more than that. Now, I was teaching people like I had figured out, how to end world hunger. This is to fix everything. And some of my students back from the 90s on America Online are actually still in this community here. Hi, Ray and Steve Michael Garner. The folks that have watched me evolve as a educator and as a mentor know full well the difference between today and how it was when I was just discovering how money can be made. But I can tell you, as a 50-year-old looking back, those instances, I really didn't know anything. Like, I didn't know anything. And I translated market success on just a whim. It just happened. Okay, it was coincidence that I happened to be long in a time when the market was going up. And I didn't understand it was going up because there was no way for it to do anything but that at the time. Everything was in a commercial bull market. It was just parabolic. Everything was just straight up. So anybody buying anything could have made money then. And that, to me, looking back, was very painful as a young man, because I was wanting it so badly to be skill when it was just happenstance. Whereas now I can talk to you in wisdom and know that was not wisdom then. That was pure and absolute luck. Whereas now, today, I have something that's measurable, it's transferable, and other people are doing it, and they're making real money with it, not just market replay or paper trading or demo. They're really realizing profitable results, and they're handling that and spending it and doing whatever they want to do with it, as they should. But as a retail trader, if you're focused on whatever it is that they're teaching with retail, once that trade scenario starts, they train you to do what? Well, if you didn't take the trade, let it go and wait for the next trade setup. Well, what if it means that you have to wait for that crossing of the moving averages and they got to be sloping down, and then you got to wait for another overbought scenario to go short? That's a whole lot of wasted fucking time for me. Like, I couldn't tolerate that. So one of the things that became a transition for me out of retail stuff is that even though if I was thinking that if the market was bearish, whatever market I was trading, and I was using a 50-day moving average to give me my bias, and then on the lower time frames, 4 hour and 1 hour, I would use a 10 and 20 moving average, exponential moving average. And if they were both pointing down and stacking, in other words, they're separating and pointing down both directions. If the daily at a 50-day moving average that was going down too, that to me was a very, very strong bearish bias. Then if I waited for an hourly overbought, that would get me in sync with a move that had already happened on a higher time frame, where other traders that using that logic wouldn't even consider it. So what did I start doing without really knowing what I was doing? I was taking the fractal nature of price and breaking down a larger move into smaller moves that repeat the same way.